Good morning. Welcome to Admiral Markets. My name is Chris. Thanks for joining us in this live webinar. Thank you for your welcome. I indeed 2 weeks break, and we're back now in May with a full schedule as always, having webinars on Monday, Tuesday, Wednesday, and Thursdays. You can look at admiralmarkets.com, of course, for the entire schedule. And my break was good. I'll talk about that in more detail in just a second. First of all, be aware that the webinar is shown to a global audience, but may not be suitable for everyone. Take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity for more information on that. Also, please be aware that trading for exchange of global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for information and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. As you probably know, we've already mentioned it in April several times, but it's also valid for May. There's a deposit bonus potential for current traders or new traders that are joining Admiral Markets or rejoining Admiral Markets. Whatever your condition, basically it's intended for everyone. So take a look. Basically, you can get up to 50% on top of your deposit bonus. And then, of course, there are some conditions and things you want to look at to be able to unlock that bonus. So that's something you need to take a look at, but maybe that's for you. It's valid for during May as well. So take a look after the webinar. All right, we're going to start with as always, a quick look at the news events of today. We actually already had a big one that was on the Aussie. There was an interest rate decision. And for the first time in a year, as you can see in this graph, the RBA, the Reserve Bank of Australia, decided to make a change in their interest policy. And the rate went down from 2% to 1.75%. That, of course, gives investors less return on their money, which impacts the currency because there's less demand for it. So the Aussie lost value, as we'll see soon on the graphs as we take a look at the live charts. This is the lowest point, the lowest interest rate point, at least this century, for the Aussie. And of course, if we go back all the way to the beginning of the century, basically it was around 5%, about 5-6%. Then it slowly went up to above 7% during 2008. And then there was the big crash, of course, the financial crash that put the interest rate back to 3%. And it slowly climbed back up. And now you see since 2011 kind of a double dip here as it goes lower and lower. It actually went below 3%. And this is all basically new lows. So definitely some bearish pressure here on the Aussie. It was unexpected. And as you can see, typically when you have one decrease, you got another one coming soon, or at least a few of these examples. So perhaps there could be another rate cut in the next few months. If these couple of examples provide a pattern, then that could happen. Other events, well, we have some yellow and green tagged events, but nothing major. All right. Except the Swiss consumer confidence is marked as red. Let's take a look at the heat map. Pound odd, yeah, we'll see that basically across the board. The Aussie really dominating the markets at the moment, moving quickly and a lot, and the Kiwi is also falling with it. Yesterday's ranges were relatively tight and low volatility, but that's a Monday, so it's typical for the start of the week. The ones that stood out a bit, pound yen and pound New Zealand, we see pound odd, the typical pound pairs, I guess. Let's take a look. Pound being the second, Aussie the first due to the news event. All right. Anyhow, let's take a look at the charts. All right. So, yeah, there was a 2-week break. So glad that you're joining again today after a bit of a pause. I had a good time, a good break, although it was a bit hectic. For me, we were traveling a lot. There was almost a bit too much travel, so I'm not sure how much break that really was, but okay. It was a good time because we had good weather though, so that was nice, and we enjoyed some sunshine. And we went down south, so in Europe. So we had a bit warmer spring than we typically would have here in Prague. Now it's getting a bit better in Prague. Slowly but surely, spring is finally starting, and we're getting close to 20 degrees. So that's what I like to see. Not sure about you. Hope you had a good weekend too. We're going to take a look, first of all, at the Aussie, actually. Sorry, let me stick with the Aussie. So we saw a price climb to the 78.6 fib. And maybe you saw it in yesterday's Monday recap video, perhaps. You can find that when going to wave analysis on the admiralmarkets.com website. That this trend line is important because that could be a bearish bouncing spot or a bullish break spot. And well, we got a bounce. Of course, it was a news event triggered, and price kind of rallying up to that trend line and making a reverse due to the news event. I also said that if this support trend line gets broken, this blue one and purple one, I would like to see a daily candle below it. I would like to see a break that is showing a daily candle about halfway. So I would like to see pretty much price reach, well, let's see, probably 75 at least during today before I would consider that a bearish daily breakout. And then the close of today's candle needs to be relatively near the low. And when I mean with relative, I'm talking about at least within 30%, preferably within 20, and the very best would be 10 or 5%, but 20 would do, 30 is okay, more than 30 doesn't look like a strong breakout. So let's see if that happens today. That is not maybe very exciting analysis, but that is what I'm, keeping an eye on myself at least. The reason why I'm perhaps cautious in using this daily chart is, first of all, today is an interest rate day. Second, it is a trend line that is best visible on the daily chart, so it is a daily support trend line, and therefore I require a daily breakout as well. The purple line, could be considered a 4-hour trend line because we can see the trend line on the 4-hour chart. So from that perspective, a 4-hour candle pushing through this here could be okay, but considering this big candle like that, even if we get a bearish candle like this right below it, I don't think it's a configuration that really is that interesting on a 4-hour chart. I think the stop loss probably should be still up in here because that's at the moment the most, I would say, the safest spot. So I don't think that really changes. So I think the daily chart makes the most sense at this point. That's a breakout. Now, obviously, you can see prices breaking through some lines already. It broke through this blue line. That's all news event triggered. So that would have been difficult to trade, if not impossible. I guess, maybe on a minute chart. I don't know. Who knows? Let me take a look. You see, this is just one drop. And yeah, that's either, someone took maybe a 78.6 trade, but that's probably the only way. Anyhow, now that the drop has happened, we are right at the trend line again. Actually, the purple trend line right here. So is this a bouncing spot? And I would say no. I don't think this is worth trading to the upside, even though we have a small bullish candle here on the hourly. Even though it could retrace part of that 4-hour candle, I'm not going to go. It is a trend line, but obviously the news event is bearish. The candle is bearish, and I'm not going to trade against that. I'm not going to trade to the upside, even though that the support trend line looks pretty sturdy here, right? No, that does not interest me at all. So I'm going to skip that. We can take a look at the 15-minute chart. Just one massive big candle. And in fact, if anything, on this 15-minute chart, perhaps a retracement to the 50 fib, that could be interesting. All right, it would retrace that big candle. I don't think it will go more than that with the stop loss still above the top, or the 78.6 fib, which is riskier, by the way, but tighter, of course, and therefore better R2R. Yeah, those could be things to keep an eye on. I'm going to keep an eye on how this retraces. If it makes some kind of bear flag, then it might not go further than the 38.2 fib. If it makes a zigzag like this, then maybe the 50 or 61.8 fib are more likely. So I'll keep an eye on all three fibs, on all of these fibs in fact, and see how this retraces to make a better judgment. But that could still be worth shorting in my opinion, as the market calms down after this interest rate decision. It's going to stabilize a bit. We're going to see some corrective pattern. When that corrective pattern finishes, then I think we could see a turnaround again and a continuation of that bearish news event. So that could be later today. All right, retracement for further downside. That could be today, and tomorrow could be the daily breakout, which we can discuss again in tomorrow's webinar. All right. So that's it from the Aussie point of view, I think. This has been a good rally to the upside, but I think a bit of correction of that rally is not strange. It's been kind of slowing down here as well. There's a bit of divergence between these tops. So from that perspective, I mean, a bigger correction would not be strange. I was open to both, really. I mean, if it breaks above this red line, I was open to trade it to the upside. It didn't. Or if it breaks these support lines, I'm interested in trading to the downside. That basically stays the same. The only thing that changes or changed is this candle, and therefore retracement of that candle I think is an interesting, retracement for a continuation down. So this all stays the same, but now this is also interesting. Now how about the target? Well, if it gets down, I mean, I could put a fib from here to here. And you can see that it was a 50 fib. If we put a fib on the entire swing high, the 78.6 fib if we put the fib on the smaller swing high, swing low. So if we leave the big fib, you can see 74.70, 73.70, the fib targets. You also can see two green zones. And those green zones are basically just broken tops. Here, 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 and here. So it seems like 73.70 could be the target for the moment, and there could be some ABC zigzag like that. Let me draw that in red. And then we'll have to see how price responds to this level, if we get a bounce, or if we get a break and a continuation of this momentum. Okay, let's move on. Euro dollar, got a minute left to the top of the hour. Euro dollar was making kind of a bit of a rising wedge, but price is breaking above it, breaking above the 115. And yeah, that wasn't surprising. We already said last week that the 30, or not last week actually, that was my wave analysis. I was already indicating that the 38.2 fib could be a bouncing spot, just like the 50. This was a respect for the 115 resistance, which it neatly did. Stopped there, paused, made a retracement, because buyers are not interested in pushing it above such a strong resistance in one shot. There's a bit of caution there. Price retraces in three waves, as you can see, down to the 38.2 fib. That's the discount that apparently was enough for buyers to get interested, and then it started to rally again. The 115 resistance is less interesting the second time price approaches it, right? Because that resistance has already been respected. So now you can see indeed price breaking through that. All right, we had some strong price action candlestick patterns last week and last month. In fact, we see bullish candles. Monthly candle was small, weekly candle was good. And we also had a breakout here already from this trend line. So there was a good breakout right there. There was a good bounce right there. Those are all potential longs. Maybe you're in those trades, or perhaps you already exited them. At this moment, it's all about the space from 115 to, let's say, 117 at the moment. If we look at the daily chart, you can see that the target is 116.40 and 117. There's a resistance spot. So at this moment, this space is being filled as we speak, and that's an interesting space. I already talked about that as well. If it breaks above 115, there's that space up to 117 probably. Now the point is that if you're not in this bounce trade or if you're not in this breakout trade, it's not been actually retracing enough, I think, to make an entry. This is the hourly chart, and you can see it's just one push after another, and there's not really been any retracement, right? We had here, this is not a good moment. This is a small retracement that had occurred right in front of resistance. I wouldn't consider that. This is not much of a retracement, it's just going sideways. So either you were quick on your feet and you took this breakout at 115.40 about 2 hours ago, or the train has left the station perhaps already from that point of view. If price does retrace, and I'm sure one day it will, right, because we know that it cannot push forever and ever, although it can push for a while, then I would like to see it go back to 115 or 114.50. And I think those could still be very good bouncing spots as well. Let's take a look at the 15-minute chart. I mean, obviously there's momentum in play at this moment on the euro dollar to the upside. No doubt about that. And so you can see that on the 5-minute chart as well. I'm not too big of a fan to jump in right here. At this point, personally, I would rather wait for retracement. Just trying to see what kind of retracement would make sense besides 115, 114.50, which are decent pullbacks. From an intraday perspective, probably, let's see. I mean, probably the pivot point, 115.26, would be already an interesting level here. Price is right at the M3 as we speak. So that could be a bit of a resistance zone. It could cause a bit of retracement. And at this moment, I think 115 seems a bit far-fetched, but 115 still remains good, or these tops that were broken and these bottoms and the pivot point at 115.25. All right. Pound USD, the cable, as it's also called, is making a substantial rally. And the analysts say that the pound has weakened a lot because of the upcoming referendum. I think it's June 20th. Let me check the dates. It's June 23rd. And of course, the Great Britain will be voting basically on remaining or leaving the European Union. So that caused a bit of weakness in the pound, the uncertainty tied to the decision that is going to be made regarding the future. And but now we see a strong pound rally. And well, I don't know if you saw Nenet's FX Street interview here, Fed not hiking anytime soon, pound dollar to strengthen modestly. And in his words here, he's saying basically that any Fed decision was going to be postponed to after Great Britain holds this referendum, which of course limits the dollar in its expansion and its strength. Therefore, maybe we see a bit of dollar weakness. All right. Now, apparently, Brexit scenario is losing strength, or that's at least what the FX Street is stating before they ask him the question. Will the pound strengthen in the upcoming weeks, right? And yeah, basically then it says yes. So you can take a look at that. But so that's something to consider, obviously. That's within 2 months from now. I yesterday was talking about the 50 fib being an important level. That 50 fib, right, is based on this particular swing high, swing low. Price stopping at the 38.2 fib, right here. And yeah, I did think that the 50 would give a pause. But I also know that not every fib is necessarily respected on all time frames. From experience, I would say 2 out of 3. So I also said if it breaks above the 50, then I think there's space up to the 61.8. Well, it broke. Yesterday, basically, we had a bullish candle with the close near the high, indicating strength and indicating that the bulls are in control. So not surprising that today we push further. So from my point of view, let's take a look at the 4-hour, but looks like a break. We see bullish candle, sideways, and continuation. So it'll be good to see this 4-hour candle close. If it did anything like this, a stop loss below, I would say it's a tight one, but below that little zone here, right? And a bit of retracement of that 4-hour candle, I think could lead itself for a setup there, for continuation to the upside. It's a risky one, I think, because it's a shallow retracement, it's a shallow, tight stop loss. But a breakout is a breakout, and I think that this breakout, if it has a good 4-hour close, should be sufficient to get up to 61.8. Now, if there's any hesitation, for instance, if there are any reversal bearish 4-hour candles, right? If there's any big wick, something like this right here, then I would move it to break even and put it below this low, the stop loss. But the rally has broken this resistance. It was a triangle right here, and the triangle could have broken both ways. We did say there was momentum here. That could fuel momentum here because this is correction. We also said there's divergence between these bottoms, which makes the long-term moving average a target. All of that indeed proving correct. The alternative would have been a break below this triangle for downtrend continuation, and that really didn't happen with the pound. We got the break to the upside. Not only did we get the break to the upside, but we broke actually this trend line, this long-term resistance trend line. There are more resistance trend lines left. In fact, if we connect these stops like this, all right, but I think that although that could still be a factor, obviously, something to keep an eye on, I think the fib at the moment is more important. Well, actually, they coexist here pretty nicely at about 148.70. So 1 trend line gone, 2 trend line gone, 3rd still alive and kicking and active, and it can be a factor as well, giving confluence as a resistance to 61.8. All right, so let's take a look at the 15. Obviously, pound USD also bullish momentum at the moment. And I think this even looks better than the euro, to be honest. I think that it's a pretty good momentum here, pretty good sideways box as well. So if we get a bit of retracement back to that box, I think that's a good bouncing spot. What could be a good idea is, let's see, 5-minute chart here, we're getting a bit of retracement. What I think I'll do is wait for this retracement to go back to that 0 line, let this make a correction, And once this starts to turn here, like 5 candles that do not break this bottom, then I think we're back into a zone where bullish or longs are good. So we'll just let this correction correct itself on a 5-minute chart. We'll let the AO retrace. This will probably prove to be a correction, considering all the things we just discussed, analysis we just discussed, this momentum, and all the other things connected to that. And so if that finishes the retracement, we see a bit of a bounce and retracement here. This could be the turning spot. Halfway, perhaps 147 or the 61.8. Something like that. So I will probably be looking for a long somewhere in here. We have the green circle. That will take some time because if we look at this 4-hour candle, what will probably happen is that the close should be near the high. So we'll see a bit of a rebound probably before that candle closes. Then we'll probably see that retracement of this 4-hour candle to about halfway, and then we'll see the bounce and continuation. That's what I'll be keeping an eye on, basically, is the close near the high, B, the retracement, and C, the continuation. Alrighty. Otherwise, it's a good channel. Very nice. Got some good space to the top of the channel. And this is the confluence point there of 3 points on the pound USD. Dollar yen, we're looking at the weekly chart. And last week was a strong bearish candle. And all the way back in, I'm not sure exactly. Oh, look at that, almost a year ago. Is that true? No. Almost. No, it's not a year ago. Okay, somewhere in July last year, August last year, 2015. I was already anticipating that that could be the end of the dollar yen uptrend because there was, according to wave analysis, we had 5 waves finished, we had divergence, all the classical signs were there to say, okay, there's a good chance that this dollar yen uptrend is toast, it's over, it's finished, finito. So then I used my counting the candle rule, 5 candles, 6 candles, 2, 3, 4, 5, somewhere in here. I expected that this top would not be broken. Back then, I was considering the 23.6 fib obviously as the first target. The second target to be the 38.2 fib. So, we reached both of those targets. But at this moment, due to last week's bearish candle with the close near the low that was really inches away from the low, right? I expected actually a follow through to that because that's such a strong bearish price action candle that it didn't seem likely, and doesn't still, that the 38.2 fib will be a massive turnaround spot. What I did expect would be a small retracement of last week's candle before falling to the 50 fib. That even didn't happen. So maybe it still will happen later this week. Just because we broke last week's low does not have to mean that we cannot retrace last week's candle later this week. Sometimes that happens. We get a dip, break of the low, retracement, and then follow through like that. You see this pattern often. I don't expect, obviously, last week's high to be broken. So these resistance zones were discussed and in wave analysis, maybe even 3 weeks ago already in our webinars. and they have not been broken indeed. They did provide the turning spot, and we got the push to the 38.2 fib. Now, this candle did throw me off a bit. I expected actually, because of that candle, a bit of more upside, but that was very limited. I think it poked through a few pips before it made a turn back down. At this moment, therefore, we got this space to work with. So let's zoom in. So we had a triangle here, break, pullback, continuation, classic. Obviously, there's some downside momentum here too. And there was a break of a small little triangle here. Very small, or a bear flag, right? And while that trade is on its way, it's anyone who took the break or the breakout candle is up 40 to 60 pips. And it seems to be a bit late for those that are looking now with me, at least, right? Let's take a look at the 15-minute chart. I think just like the others, I would like to see a bit of retracement here. Then it has a target of 105.20. That would leave us some space. Let me take a look at what kind of intraday levels we're looking at. Pivot point is 106.11. Yeah, that makes sense. I think 106.11 right here, there's a bit of a smaller triangle. Bear flag break, and then we get the triangle, and then another break. If you joined us for the Pro Learning Lab webinar we had on patterns, I don't know if anyone joined that by any chance. I was talking about big patterns. When big patterns break, after the big pattern break, you get an impulse, and often you get a smaller pattern before you get another break, and that these smaller patterns are actually the best. If you joined that webinar, you can see a perfect example here again, right? This was for a 50-minute chart. This was the big pattern, and this was the small pattern. So a hook back to that level, I think, could be a good resistance zone. With a stop loss, let's see. Probably above 106.30 or 106.50. 106.50 is the safest. 106.30 is riskier, but has a tighter stop loss. All right, so I'm going to keep an eye on 106.10. Target 105.40, 105.20. All right. So we see this Aussie weakness, by the way, not only against the dollar, but we see the Kiwi following it, right? We see, or at least was not visible on the daily chart, but we saw it here on the hourly chart at least, right? 70 pip fall, but Kiwi is rising quickly. Aussie too, interesting. All right, this is looking more like a zigzag so far. at the speed it's rising. Kiwi is rising faster. And we had, of course, a big upside on all of these Aussies. I mean, against the pound, we saw it against the euro as well. We see the Aussie weakening. The pound odd was in a grand downtrend, and Beverly got a lot of pips on that. But I think hopefully she is out of that trade by now because it did make a substantial rally of about how much 1,000 pips in the meantime, or more than 1,000 pips. Not sure if Beverly is in today with us, but if she is, if you are, it would be great to hear from you. I'm curious what the exit price was for you, but it was in any case, very much positive. Very high. It would probably be, I think it was 2,000 or something like that. And but we see eventually all this divergence and all these basically this corrective channel finally being broken to the upside, and the Aussie news event just kind of accelerating that to the upside. Well, I don't think that at this moment it is interesting to trade. Obviously, as you probably can imagine, and I'm trying to make a judgment for myself if it's worth it, if it does make a retracement. I'm not too sure. I mean, probably yes, but it's not something I'll use a pending order for. It's something I'm just going to have to monitor throughout the trading day. How does this correct really? And does it show some signs of a bounce when it does retrace part of that candle? The reason why I'm a bit cautious is that this is a news event candle. It is a spike. It is one candle. And it is coming in a spot where we've already had substantial upside. I'm not saying it's impossible for this to continue with the trend up. There's a good chance, but it's just that I want to see some confirmation before I trade that. The same thing is for the EURUSD, basically. That's a bit messy. Sorry, let me redo that. But not only was my chart messy, but this weekly chart is messy too. A lot of choppy price action, and I don't think I'm that interested in trading at this at the moment. But the upside could be also most likely considering the uptrend here on the hourly. So that kind of follows suit. Anyhow, that is basically, the Aussie is being just dominated by that news event, and you just see it on all of these currency pairs. Let's go to the Kiwi. That's the New Zealand USD. Good channel to the upside, but pretty choppy one. Well, I'm not that excited about this. It's not something I think is particularly, set up for something that I find very interesting at this moment. I don't like the upside at the moment because of the strong retracement we've had. I don't like the downside either. I'm going to wait this one out. But if you have any, trade ideas that you would like to ask my opinion about, by all means, you can use the chat, of course, to do so. But I don't. Doesn't seem that interesting to me. Dollar CAD has continued lower. It's still quite interesting how much divergence is present between these bottoms. Surely we had some big retracements here, and maybe even here and here. But yeah, it's just keeps pushing. It's of course it's highly connected to oil, so maybe that's why the divergence doesn't really matter as much, as long as oil keeps pushing upwards. But considering this, that price is so near the bottom of this channel with so much divergence, I still think that it's, despite the downtrend, not interesting. All right, so we took a look at most of the majors except the pound yen and euro yen. So let's do that right now. Alrighty, so break of this triangle did see a strong retracement to test basically again the top, and that top held, and we see, or roughly held, and we see retracement from that. Not really that interesting at the moment for me. But if it does break this bottom, maybe it could continue. There is already double divergence between these bottoms. So one would maybe expect a bigger rally to the long-term moving average. That double divergence is pretty strong. On a daily chart, so if anything, probably I have to be careful with going short. And if price bounces off the 78.6 fib, 154, then there could be a rally to finish that zigzag. All right, I don't see any momentum to the upside here. So far it's still looking pretty corrective. So a break here could see the fall to the 78.6 fib, and we could see a bounce from there. If there is any momentum that starts to build like that, that would change things. Then it probably will not get down to the 78.6 fib anymore, and it would just make probably a bull flag and continue. So it would be good to keep an eye on both these trend lines, both resistance and support. All right, see how this triangle plays out. All right, triangle is pretty tight. There's little space between it, between the top and the bottom. It's about halfway, about 40 pips to the top and 40 pips to the bottom. And I think that many traders get tempted to kind of trade halfway triangles like this, or trade at moments that it is about in the middle or halfway. And I don't think that. I think it's appealing for the psychology to do so, because most of the time price is kind of quieter. There's been time to think about a trade, and it's I think psychologically more difficult to take a trade when it reaches an extreme, either reaches a decisions zone. The good decision zones are often not where price is at the moment. It's often a bit further. And then when price gets there, then it's not easy to trade it either way sometimes, right? So it's appealing to, I think, in general, just easier to take trades when it's kind of like in the middle, and you just kind of like take a guess which side it goes. And yeah, I'm not a big fan of trading it here in the middle and try to avoid taking middle trades. I like to take basically when price gets to my zone and either breaks it or bounces at it. And it depends on my analysis whether I trade both or whether I only take the bounce or take the break. But I think for the pound yen, it's better to wait. It's pretty messy. You got a downside momentum, you get an upside momentum, you get a downside momentum. So, you got, if I can compare it to waves on the sea or ocean, you got big waves going on at this moment, but the current is not really clear. So I would let, the waves settle down a bit, try to see which direction the stream is going so that we can ride with that momentum. I think let's take a look at the euro yen. That looks a bit more bearish, but ultimately though there is also double single divergence, probably. And but you can see it's a bit of a choppy zone as well, right? From the daily perspective. Not too big fan of that. Is there any particular currency pair you would like to take a look at? Or is there any, we could take a look at commodities and stock indices. But before I do that, Wei is asking my opinion on the general USD situation. Are we getting reversals? Is there an uptrend at the moment, or will there be an uptrend soon, or is the downtrend continuing? And if I look at, we'll take a look at the dollar index, but if we look at the euro dollar, for instance, still continuing higher, by the way. Anyhow, if we look at the euro dollar on a higher time frame, or the weekly time frame perhaps, then this is a neat channel, and that could ride for a while. If we look at the overall situation, though, I think that this momentum is still dominant, but it is clear that this could take longer than I probably thought last year. Like September, I was thinking March, April would be the turning spot. That was my estimate, but it was also the earliest point it could do that. Probably because of factors that have developed, like the US data, maybe a bit, as Nanette also mentioned, the British referendum on the EU, those factors not making a second rate hike very likely, and it seems therefore that the dollar strength has been kind of like delayed a bit. So it doesn't seem like March or April is going to be, that's for sure, right? It's already May, so it doesn't seem like that has not happened, and it doesn't seem like May is going to have that downside either, because obviously, if you look at weekly and daily charts, we are in an uptrend channel. So maybe it will be a few months down the road. But unless price basically breaks, let me get rid of this fib for a second. Unless price breaks above the 50, the 121, I still consider that bearish territory on weekly and monthly. So all of this is, from my point of view, still a retracement. Cheers, Bob. Talk to you soon. So no, I think that regarding dollar longs, indeed, resistance spot will be 38.2 fib or the 50 fib. Those could be turning spots, but even the turn could be slow. If it's going to take 2 months still before the downside continues, then it could hit 117, make a retracement, go up to 121, make a retracement, make a bear flag, and then finally break. Well, that could take some time. Time that is needed before maybe finally that second rate hike in the US happens. And interest rate goes up from 0.5 to 0.75, perhaps somewhere in July. I'm not sure exactly when these meetings are, right? So I'm just saying any random month after the referendum or August. I'm not sure if there's, once again, I'm not sure if there's a meeting in August, but you know, anywhere in there, maybe September. So for the moment, with this weekly channel to the upside and this daily uptrend and daily break, bulls in control. Any dip could see further gains. I would say to 117 at the minimum. I would say, but who knows? Maybe even up to the 50 fib. But if it breaks the 50 fib, well then, yeah, I changing that outlook. I mean, it's definitely something else is going on. Perhaps. I mean, if it breaks the 50 fib, I am not long-term bearish anymore on the euro dollar, and therefore not long-term bullish on the dollar anymore. All right, let's take a look. Dollar index, you can see breaking some important bottoms here. Double top on the dollar. Been moving choppily, but has been moving down. And yeah, the next one is the 50. All right, so let's see how it handles itself there. But definitely dollar losing some ground here. So let's take a look at some of these indices and commodities. Oil seems to get some traction, 2 months in a row bullish. Alrighty, so it seems like we're making a zigzag. Next target, 51. We're right at the minus 272 target. So a bit of a pause here, a bit of a bounce back to 42.50 for continuation up to 51. Seems to be the most, likely path by just quickly analyzing it like this. Gold finally getting a choppy break here, but after some sideways move, finally making the continuation. So we were talking about that triangle probably 3 weeks ago, got the break, heading towards its first target. And let's see. Some bullish candles here as well. And we're clearly breaking this falling wedge. So I think that there's some good upside to 1320 and maybe even extension to 1400. Silver is doing the same. Let's take a look at the S&P. S&P 500. Yeah, thanks, Wei. They are very cute, these cats. 2 of them, 2 sisters, and they're very demanding in their attention. They always are seeking our guidance and want to play around with us. They're 2 Burmese cats, in fact. If you know the type. You can look it up maybe on Google if you don't know them, but they're very, very cute. All right, so S&P 500 Same spot basically, really didn't go anywhere last few weeks, just hanging around these tops. Warren Buffett has said on the news, I'm not sure exactly which channel anymore, that if the interest rates stay at zero for the next 50 years, that he thinks that the market, the Dow, can go to 100,000. So that was a statement that caught some attention. Obviously, 50 years is quite a long time, so it's a bit of a theoretical, I guess, I would assume. But yeah, it's having some struggle here with the resistance. Had some steep dips here, 3 in a row, but ultimately they didn't lead to a big retracement or a bigger reversal. They were steep retracements, there were some impulse here, but ultimately still getting some upside. We haven't had a higher high in 12 months. So we're getting close to a situation where a breakout does make sense. My rule is 13th month is a good breakout, or 13th candle. This is candle number 13. Is it true? Let's see. This is candle number 12. So this could just be a big correction, and we might get a new higher high soon, within a couple of months. Maybe this is a wave 4. I don't do wave analysis on stock indices or commodities, but it doesn't look that strange to see that. Could make a lot of sense. In that case, I'll adjust the fib from here to here. Target 22425. And then there'll probably be divergence between these stops. FTSE is having a bit of a trouble relatively compared to the S&P 500. All right, well, that's some of these stocks and commodities. Let's take a look maybe on New Zealand. On New Zealand, breaking the trend line triangle I had, but not really making a substantial rally. In fact, finding weakness and heading lower here. But I would say price is pretty close to support as well. We got this trend line here. We have this trend line. We got some bottoms here. So I don't think that is a substantial bouncing spot. I mean, sorry, substantial space to the downside. Got Euro Pound as well. A couple of downside weeks. I'm not too impressed by this. I don't have any particular setup, or I don't have anything that I really like so far in the Euro Pound. So let's skip that. Let's do a recap otherwise. If you have any currency pairs, just let me know. We'll take a look at those. But I think that for the moment, Aussie, New Zealand, and Euro Pound do not look interesting to me. So Euro Dollar keeps pushing higher as we speak. There was a push up here early this morning. Was looking for retracement, but price just keeps going up and up and up. So for the moment, I think that a retracement later, probably in the New York session, is makes the most sense. We didn't get it here. It just kept going, but I think that soon this momentum will finish, and we will get a correction, and we'll see a continuation, I think, in the New York session. Now, considering this extra leg that we had here, it might not get down to the daily pivot point, and it would probably be M3 is at 115.60. So that could make the most sense right here, because this could be an ABC correction. There's a bit of a sideways zone here. Probably if we put a fib from here to here, it's roughly at the 50. So 115.50, 115.60, I think, would make a lot of sense for an upside continuation after the retracement. So what will happen probably, we'll see a bit of a downside like this. We'll see a correction like that. I would put a fib from here to here on that leg, and then there should be a minus 61.8 target coming up right around the 50 fib. And that should give confidence there. So I think that's something I'm going to take a look at today. Pound USD, strong 4-hour candle. Once again, if it closes anything like that, that's good. In fact, it continued already, and this momentum didn't die down as yet, so it's probably going to be the New York session. And this is a pattern that happens often, is that, well, if there is a breakout in the London session before the European Open, or it doesn't really matter, just there's a breakout in the European session, then it will last for a while, then make a retracement, and you'll see the same direction in New York. Of course, if it's with the trend. If not, if it's against the trend, then that's not true. If it's with the trend, then you'll see, if you're not in that breakout relatively at the beginning, it can keep pushing and pushing, and then it's better, in my opinion at least, just to wait for the New York retracement. If you caught the breakout somewhere in here, that's great. You're in that trade. You can lock in profit somewhere in here, depending. I mean, that's what I would do, but it depends how you trade it, of course, your system, etc., your own risk, preferences. But if you're trying to catch it somewhere in here, yeah, there is a bit of extra leg still. I don't like chasing those particular momentum pieces. And I'd rather wait for a New York continuation. But if I'm in here somewhere, or here, even better, but somewhere at the beginning, that's where I prefer to take the trade. But maybe if you're a scalper, maybe then even this is a pattern. This is a bull flag, and it is a fib. So yeah, it's even. I mean, it is tradable, but it just has to be very low time frame, and you do get breakout to the minus 272 target, right? So these patterns happen on all time frames. It's just the question is what time frames do you want to trade? And I personally don't trade the 1 minute, but if anyone does trade it, there was still a good continuation probably, because we didn't have divergence indeed with this upside, and now we do. So the likelihood of probably price making ABC is increasing. The target for the pound is 148.60, but let me see. All right, pivot points. Now 148.60 is the 61.8 fib right here and the trend lines. I think that is the main target, but I'm not sure if it will get there today. It would require a daily candle of 200 pips, which is a substantial size. It's above average, probably. Not sure. Maybe it's about average actually. So maybe it is not that undoable. Well, yesterday was 100 pip day, but smaller days. You had a couple of smaller days here. So it's not impossible. It's definitely a bit more than average. But if a day has a decent volatility, then 200 pips is definitely manageable. So 148.60 could be the spot to aim for, in my opinion, at least. Now, I wouldn't aim for the very last pip. Maybe 148.50 is a bit of a round level target here. So 148.50 could be a bit better, but it could extend to 148.60, 75. There is some pivot points that could, of course, stall price as well. R2, 148.30. R1, 147.82. All right, but 148.50 I think is 148.70 is the main target. All right, let's take a look. Derek is asking about the Aussie Yen Index. Aussie Yen making downside 2, big candle to the downside last week, last hour, last 4 hours, and 3 out of the 4 last days, 3 from the 4 trading days last month. So yeah, there's a lot of bearishness to talk about here with the Aussie against the yen. Bit choppy though, but there is some good downside pressure at the moment. But it's the same like the Aussie Aussies. Is this just a news spike and we see a complete turnaround, or is this indeed setting the direction of the day for downside? And I think that probably, well, I think both are possible. I think that considering the downtrend, downside seems the most likely. But I would like to see on all Aussies just to see how this corrects to the upside. Is there any sign of weakness when it retraces? If it does, I think that could be interesting shorts. But I'm just keeping an eye on it. I'm not going to put any pending orders, and I'm going to monitor it because, well, it is always a bit awkward just to see one big candle like that. I'd rather have a couple of bearish candles and then see a retracement. I think that's more likely a retracement than seeing one big news candle like this. Is less pleasant. Now this was maybe news too, and we did see a follow through as well. So it's not impossible. It's just that this this is not only is this maybe a news candle, but it's also already coming at a spot where it could be over that move. So I just want to be cautious, that's all. But I do think the downside seems most likely. Let's see. Robert is saying that he thinks Aussie can go back up to 78, all the way up to this 88.6 fib. And yeah, that's an interesting perspective. And yeah, it's that's why I want to indeed kind of tying into what you're saying. I want to be a bit cautious because is it a new spike and you see a close in reverse indeed? Tough to say. Those things do happen. It is still not breaking these support levels, so you got some arguments to make for that. And once it breaks the trend line, there's a better, of course, a better potential there as a breakout to go to the upside. And the target, one of the targets indeed could be that 88.6 fib. So it's interesting. It definitely could be a scenario that plays out. So let's see how the price responds. This is showing already some momentum, which is indicating that we're not getting probably the chances of a bear flag, which would have been good signal for downside, are ever so decreasing, if not over at the moment. DAX, let's take a look. I didn't take a look at DAX indeed. Let's see, we got some resistance here, trend lines. Price making a move to the 50 fib and then to the target and Fibonacci retracement levels, kind of a confluence there with the trend line and moving back down from that. So that seems to have worked out okay, I think. Looking at this, the lines we drew here, it seems to have worked as expected. The break here of resistance, pullback and continuation. All right, so yeah, that basically, I think we could see a trend change here again on the DAX. It's a bit of a mess here, to be honest. But I mean, ultimately we can see a bit of a downtrend channel, of course, on the weekly, if we connect choppy one, but we can see it. Let me get rid of this fib here. But ultimately it's kind of messy here. But some retracement still, I think, could definitely happen. We can put a fib from here to here now. We could just be bouncing back between these fibs. 50 fib could still be a bouncing spot as well. So something like this. Could happen. I don't expect some wild moves at the moment, considering this messy chart. I don't see anything interesting, to be honest, when I look at this. But let me change the perspective. Maybe if I just make it a clean chart. Let's see. Well, I guess if the only thing I would like to add is if it breaks this support here, this is an interesting zone right here. I think that's probably important. Right, so But let's see how price responds if it makes an ABC indeed and bounces, or if it breaks. What is the name indicator line green, yellow? This is the name, I'm not even sure, but I can send it to you. This is an EMA indicator that basically changes the color depending on the angle. So green is bullish angle, orange is bearish angle, and it does that automatically, of course, which I like because then it just instantly says, it communicates that information to me, whether it's, the average is bullish or bearish, and I like that. So the same with the long-term moving average. So if anyone's interested in that, you can just send me an email. Now, just some messages. I'll write that down with my email is right here, so you can get that for free. We're going to have more webinars in this month, so I'm looking forward to hearing from you. If you have any particular topics, you can do that through Twitter. I have actually a tweet asking you what webinar you like the most. There are four topics, but if you reply, of course, I can take that into consideration. There's 90 minutes left for you to vote. Price action, Fibonacci, patterns of fundamentals. If you have a preference, what webinar topic you would like to see Nanette and I discuss in our weekly webinars, you can still do that by going to my Twitter handle if you're interested in voting. If you're interested in this indicator, you can actually get that by writing to here. And if you're interested in getting a free trial for 2 weeks with Nanette's system called AcuPP, Nanette is and I are offering you the potential to test it out for 2 weeks for free. You can do that by sending us an email through Nanette or myself, and we'll set you up for later this month. And those that have already applied, don't forget to send us your demo account or real account number. Only the account number, of course, not any passwords, obviously. Only the account number. And we need that because the trial is password protected. So without the account number, we cannot activate the trial. So that's why we need the account number. So if you already have signed up and you would like to, of course, try it, then you would need to send the account number. Not everyone has done that as yet. So just be aware of that. So that's if you're interested in the trial for 2 weeks this month. Preferably before this week Friday if you want to join this month. If you do it after this week Friday, then you'll have to wait just a week or two probably. If you're interested in more webinars, you can find out the topics by going to webinars, and you can see tomorrow's strategy. Nanette is going to take a look at some questions and answers of the price action trading school. And Nanette and I take a look at multi-time frame scalping on Thursday. So I hope that you join one of these webinars, and wish you good trading, and talk to you soon. Cheers.